so far it seems like the impact on the export sector seems quite minimal. That's what we're hearing from the factories so far, that most of them seem to have had perhaps some disruption. But as far as we know so far, it's not particularly serious for the export sector. The other thing, obviously, to be considering when we think about the economy more broadly is whether this is going to lead to a lot more fiscal spending from the government in terms of rebuilding, particularly Hualien and the highways and infrastructure that's been damaged around there. And then again, obviously, it's a bit early in the story yet to know too much about what the government's going to be planning there. As you said, coming into this, the manufacturing sector, the PMI has been below 50 for, I think, 22 months now. So it's the longest consecutive decline in the PMI in the history of that series going back to 2005. So it has been a very deep and long recession for Taiwan's manufacturing sector. Before the earthquake hit, there have been signs that that's now beginning to turn around. So in the latest PMI, export orders were up. The export sector, in terms of year-on-year growth, has started to rebound over the course of the last 2 to 3 months, very much in line with what we're seeing in the rest of the region, albeit the leading indicators of Taiwan are probably stronger than elsewhere. So the question now, I think, for the markets is whether the earthquake is going to disrupt that recovery.
Vikas?
Paul, if we think a little bit longer term, you were talking about the government spending, fiscal spending. If we extend that to North Asia and China, you have great perspective going back to your time at Macquarie and in the media also. You've covered this rise over a very long time. If we shift to North Asia for a moment, if Xi Jinping were to come and hand the purse strings of China to you, what would be your priorities on day one? Where would you start?
Pretty good job to have, I'd imagine. I mean, I think, and I think, there's a pretty standard prescription, I think, that most economists outside of China, at least, would be interested in. And in fact, some economists in China are also talking about this. And I think the most obvious, the most attractive proposal that I've heard, which I think ticks a lot of the boxes that would be helpful for China's economy at the moment, is to have a fiscal package that is focused on the 300 million or so people who are sort of living in cities but haven't managed to permanently migrate to the cities because they have trouble with their hukou. So perhaps their children are left at home with the grandparents, they're living in the cities and having to go back for the holidays, they probably don't own a property, it's difficult to really invest in life in the city. So given in China right now the weakest area of the economy is obviously in the consumption sector, with consumer sentiment being extremely weak. If we look at inflation, the weakest side of the inflation picture right now is on CPI. Everything suggests that the drag in the economy is on the household sector rather than the industrial sector. So what would this package resolve? We have the government issuing a bond which allows some financing of the social security spending that's needed to allow permanent migration of these people to the cities. What's the impact of that on the economy? Presumably we'll see some impact in terms of increased consumer spending. It probably also means there'll be a bit more stabilization of the property market because these people are going to feel more willing and able to buy property in the cities. And it helps with the investment side as well then, because it helps to stabilize property. So it deals with some of the weakness in the household sector. It also deals with some of the weakness in the real estate sector. It's a sort of thing that promises not only some cyclical boost to the economy, but I think is also something which would show that the government still has ideas, and the long-term outlook for China's economy isn't as negative as the markets are now currently assuming. Of course, that's the proposal. That sounds quite interesting. But so far, we haven't heard anything from the government in terms of actually following through with that. And so at the moment, we're left with a situation where the household sector in China is weak. It's all about how quickly, very much related to what's happening in Taiwan at the moment in terms of the cycle. It's really much about the export sector and what's going to be happening with manufacturing, which is left to drive China's economy as well as Taiwan's.